Last week, the S&P 500 and Nasdaq broke out to all-time highs. And as we're recording this video right now, we have another major US index that's trying to join the party.
A strong ending last week led to all four of the major US indexes up over 1%, with the Russell 2000 up just under 2%, and the Nasdaq was up about 1 3/4, while the S&P 500 and the Dow Jones were up about 1.5% last week. Foreign and emerging markets also had a great week, with foreign markets up about 1.5%, and emerging markets were up 1.2%, and now both foreign and emerging markets are up double digits for the year. If you watched our video last week, you know that I talked about the S&P 500 breaking out and making all-time highs, and the Nasdaq did the same thing. So this week we wanted to look at a chart of the Dow Jones, which tracks 30 of the largest US-based companies that are traded on the New York Stock Exchange or the Nasdaq. And as we're shooting this video on Monday morning, the Dow Jones has also broken out above the top blue line here and made all-time highs. We were waiting for the Dow Jones to reach around that 27,250 level, and again, as of Monday morning, we're watching the Dow Jones continue up past that breakout level and make new all-time highs. Now, the only US index that we're tracking that hasn't made all-time highs yet at this point is the Russell 2000. So we're also keeping a close eye on the Russell to see if it can catch up and make new all-time highs for that index by the end of this year.
Last week, the Federal Reserve cut rates by 0.25%. That's the third time that they've reduced rates in 2019. The current Fed's fund rate is sitting at 1.5%. Now, all of the reductions throughout the year have caused the yield curve to go from inverted to flat. Now, an inverted yield curve is a sign of a possible recession ahead, whereas a flattened yield curve shows slight economic growth ahead. The Fed also signaled that they're going to continue to assess the economic health of the US and also the global markets. And they're going to be looking to reduce rates at least once over the next 6 months. In other news, on Thursday, President Trump announced that there will be a new location for the signing of the Phase 1 trade deal with China, and also promised that the Phase 1 trade deal will include all of the concerns that the US has about intellectual property and financial services. And it will also include an agreement between the US and China where China will buy $40 to $50 billion worth of agricultural products. And lastly, the deal is going to halt any further tariff escalation. And President Trump said that this deal gets us about 60% of the way there towards our long-term goal of having a trade deal with China. The final story from last week is that the corporate sector is showing significant growth, with approximately 80% of the companies that have reported their third quarter earnings beating analyst estimates, with companies in the energy sector being the notable laggers. Now, with corporate earnings remaining this positive, investors are optimistic that earnings will continue to grow modestly.
All eyes this week will be on the US and China to see if they can actually get the Phase 1 trade deal signed.
Thanks for watching, and if you're on YouTube, please subscribe to our channel. You can also find us on Facebook, LinkedIn, and Twitter at Perspective Wealth Planning.